Welcome to All Stocks Index, your go-to destination for insightful analysis on companies' performance through a visual and detailed examination of their financial statements. In this video, get a quick overview of Apple and gain an understanding of its 2023 income statement. Apple is a global technology leader, known for its innovation in consumer electronics, software, and online services. Founded in a garage in 1976, it has grown into one of the most valuable companies in the world. Apple designs, manufactures, and markets smartphones, personal computers, tablets, wearables, and accessories worldwide. Apple is best known for its flagship products such as the iPhone, iPad, Mac computers, Apple Watch, and Apple TV. Apple offers a variety of services designed to enhance the user experience across its devices. These include AppleCare and cloud services. Additionally, it manages multiple platforms like the App Store, enabling users to discover and download applications and digital media such as books, music, videos, games, and podcasts. Apple retails its products through its own physical and virtual stores, as well as through direct sales teams, third-party cellular network providers, wholesalers, retailers, and resellers. Apple is headquartered in Cupertino, California, a short distance from the original headquarters at One Infinite Loop. The main building is a giant, multi-story circle, colloquially known as the Ring or the Spaceship. Steve Jobs, one of the original founders of Apple, along with chief designer Jony Ive, conceived the idea for a place where Apple employees can meet, interact, and collaborate on new ideas for products. Apple devices bear the slogan, "Designed by Apple in California, assembled in China." A more accurate picture shows that while Apple products are designed in California, their components are actually assembled in various locations around the world. The assembly is mostly done in China, with key manufacturing partners like Foxconn and Pegatron. Components are sourced globally, displays mainly from Japan and South Korea, chips from the United States and Taiwan. Some assembly also occurs in other countries, including India and Brazil. In 2023, Apple hit an all-time high in smartphone market share, claiming the #1 spot for the first time with 20.1% of the global market. Much of Apple's success can be attributed to its chief executive officer, Tim Cook, who served as CEO of Apple since August 24, 2011. Under Cook's leadership, Apple went through a decade of relentless growth, bringing the company's market capitalization to almost $2.66 trillion. Apple outperformed the broader market by more than 3-to-1 over the past 10 years, as the company's share price increased by more than 1,000%. Apple's growing revenue is a testament to its achievement and relentless pursuit of innovation and design excellence. You typically find a standard 10K or 10Q report in an Excel or a PDF file. The goal of this video series is to visually display the information, making it more interesting and engaging. We begin with an overview of the income statement using this Sankey diagram. It will serve as our roadmap for navigating through the financial pathways of Apple's operations. We'll begin from the left side of the diagram, where we'll delve into the various streams of revenue, ranging from sales of electronic products to the array of services provided by the company. Our exploration will then shift towards the annual revenue and its growth trajectory, followed by the intricacies of manufacturing and operating expenses. Finally, we'll examine the net profit and several profitability ratios. First stop, Apple's revenue streams. Apple's primary sources of revenue include iPhone, Mac, iPad, wearables, and home devices, as well as other services. Since 2008, iPhone has been Apple's most valuable product, generating 52% of total revenue in 2023. Here's how these categories performed in the last 5 years. Sales were steady until the 2020 pandemic, during which they exploded, driven by high demand. In 2021, Apple could barely keep up with customer orders, and sales jumped by $90 billion. However, in 2023, supply and demand stabilized. Combined with inflationary pressures, the revenues from the sale of products decreased by a few percentage points. Mac sales dropped by 27%. Nevertheless, Apple made up for it with their tremendous growth in the services category. Over the years, this category has been growing steadily. Something to keep an eye on for the future. Since 2021, Apple recorded record-breaking revenues. So, how does it compare historically to the last 10 years? Tracing the revenue back from 2012, Apple has performed remarkable in terms of revenue growth. Apple had huge jumps in 2015 and 2021, where its revenue increased by roughly 30%. Overall, it is a clear upward trajectory with an average annual revenue growth of 9%. In fact, Apple generated more annual revenue than Google, Microsoft, Meta, Tesla, and Nvidia. Only Amazon achieved far higher sales than Apple. Returning to our roadmap, let's zoom into the costs of production. Total revenue in 2023 derived from the sale of products, specifically consumer electronics, and from the sale of services was $383 billion. Products constituted 78% of total sales, a total of $298 billion, while services accounted for the remaining 22%, a total of $85 billion. Apple's product portfolio includes the iPhone, Mac, a line of personal computers, iPad, as well as wearables, home gadgets, and accessories such as AirPods, Apple TV, Apple Watch, Beats products, and HomePod. Apple offers a variety of subscription services in its well-known App Store. Customers that own Apple devices can download applications such as Apple Arcade, Apple Fitness Plus, Apple Music, Apple News Plus, Apple TV Plus, Apple Podcasts, Apple Books, and many more. Apple created an all-encompassing ecosystem that ties together hardware and software. The cost of sales is the accumulated total of all costs used to create a product or service, which has been sold. Apple spends 63% of products' sales in costs such as buying materials and components, direct manufacturing labor, packaging, shipping, and freight. On the other hand, producing services is far more profitable for Apple. Only 29% of service revenue goes towards costs, leaving much gross profit. To calculate gross profits, we take the revenue and subtract the cost of production or manufacturing. Gross profit from products was around $109 billion. Gross profit from services was around $60 billion. That's almost double the gross margin of hardware sales. We'll combine the gross profits together to calculate the total annual gross margin, which comes out to be $169 billion. Gross margin is an important profitability measure that looks at a company's gross profit compared to its revenue. Dividing $169 billion by $383 billion, we get around 44% in gross margin. A very strong ratio for any company. Looking at historical data, Apple's gross margins grew steadily every year in the last 5 years. In 2023, it had the highest margin, suggesting that Apple is retaining more from each dollar of sale by keeping the costs low. However, we are not done with expenses. We still have operating expenses, taxes, and others. Returning our focus to the gross profit of $169 billion. Let's look at how much Apple spent on its day-to-day operations known as OpEx or operating expenses. Apple spent around $55 billion on OpEx, a significant chunk of their profit. Operating expenses include rent, equipment, inventory costs, marketing, payroll, insurance, step costs, and funds allocated for research and development. Overall, Apple efficiently managed its operating expenses over the last 5 years. The company found the right balance between reducing the day-to-day costs while growing its revenue and increasing earnings. Apple's OpEx remained consistent at around 13 to 14% of revenue. There are two common types of operating expenses: research and development, and selling, general, and administrative expense. Apple spent about $25 billion on SG&A expenses. But it spent even more on research and development, almost $30 billion. That's an estimated 8% of their revenue. Apple depends heavily on R&D for new and improved products and services. Moreover, R&D is critical because failure to offer cutting-edge technology can lead to loss of market share and even potential bankruptcy. Another expense that gets less attention is other income or loss, which can originate from interest, dividends, miscellaneous sales, rents, royalties, and gains from the sale of capital assets. Although there are no specifics on how this expense was incurred, we are told Apple spent $500 million in other expenses. This brings the remainder to $113.7 billion in income before tax. Apple paid $16.7 billion in taxes with an effective tax rate of 14.7%, slightly higher than Google and Microsoft, which paid 14% and much lower than Amazon, which paid 19% in taxes. We finally arrive at the remaining net income of $97 billion. Let's recap how we arrived at this number. Net income, also called net earnings, is total revenue minus cost of goods and services, minus operating and other expenses, and minus taxes. It's the bottom line on the company's income statement. $97 billion is what Apple generates from operation in just a single year. Net income is the best indicator of a company's profitability because it shows the total amount its shareholders earned during a given period. We can take it a step further and calculate the profit margin. It is a financial performance ratio calculated by dividing a company's net income by its net sales. In this case, we take $97 billion and divide it by $383 billion, arriving at a solid 25.3% profit margin. For every dollar of revenue, Apple retained a quarter. Looking back at the last 5 years, we noticed that profit margins jumped to approximately 25% in 2021, just as we saw an increase in revenue. Plus, the growth of sales and service category pushed the margins even higher. Profit margins depend on what the company does. Hence, it's difficult to compare this ratio across companies from different industries. Also, Apple is unique in its sector. Therefore, we'll simply compare it to other big tech companies. What's surprising here is that Amazon, with its highest revenue, only had about 5% in net profit margin. Yet, NVIDIA had a whopping 49% net profit margin. Here's another way of looking at it. If all revenues are set to 100%, the graph nearly reverses the slope, with NVIDIA clearly being the most profitable company on the list. However, these firms are cherry-picked based on their performance and only used for visual contrast. In reality, it's like comparing apples to oranges. The last item on the income statement is earnings per share. EPS indicates how much money a company makes for each share of its stock. It is a widely used metric for estimating corporate value. To calculate this ratio, we take the net income of $97 billion and divide it by the number of shares outstanding, which is around 15.8 billion. We get $6.13 per share. It would require more context to better understand where Apple stands in its valuation. Analysts typically use specific formulas with various assumptions to forecast earnings and to determine the financial health of a company. Furthermore, EPS figure can significantly move the stock price depending on how it compares to analyst estimates. Earnings are reported every quarter. Since Apple is a cyclical company, their quarterly earnings vary depending on the time of the year. Apple typically generates more revenue during the holidays when customers shop for gifts. Apple also tries to time their new product launches to match when the consumers are more likely to purchase them. As a result, $6.13 is actually a combination of 4 consecutive quarters reported on an annual statement. Another profitability ratio that's widely used by analysts is called PE, or price-to-earnings ratio. Simply divide the current stock price by the company's earnings per share. Apple's PE ratio is 28. Is the company undervalued or overvalued? Well, the median PE ratio for the S&P 500 was 24 as of May 2023. However, Apple is a technology company, so looking at the US tech sector, which is trading at PE ratio of 45, you might think Apple is undervalued. Therefore, using PE ratio to derive a stock's value is highly subjective and may depend on many additional factors. In summary, we looked at Apple's 2023 income statement and highlighted its key values. Overall, the company appears to be in a very healthy financial state. So, has Apple reached its peak, or can it continue to grow? We will continue to monitor Apple's performance in the future videos, so stay tuned. If you found this video helpful, check out our other videos on financial statement analysis. Don't forget to like and subscribe, and we'll see you next time.